Pharma stocks trade higher as Donald Trump's executive order on pharmaceuticals and drugs turns out to be not as bad as feared earlier. The Nifty Pharma Index is the top sectoral gainer right now.
JM Financial climbs on the back of the results. The stock is up close to 4.5%. The company's other income rises 61% sequentially. Operating expenses decline as well.
Paytm slips more than 2% following a large trade where 4.1% equity gets exchanged. Sources say Antfin is the likely seller. Meanwhile, KFin declines more than 4% after 10% equity gets exchanged. Sources tell CNBC-TV18 it's General Atlantic Singapore, which is the likely seller.
And Swiggy trades under pressure. The stock is down 5% after the 6-month lock-in period for the pre-IPO investors ends today. The stock is seeing some selling pressure.
Aether Industries slips nearly 4% after the company announces an offer for sale worth nearly 629 crore rupees with a floor price, which is a significant discount to the current market price.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And after the big run that we saw yesterday, some kind of cooling off on the headline index, but that's par for the course. We had a super duper run yesterday. The positive though today is that the mid-cap index continues to outperform, and that's trading in the green.
It's par for the course, Nigel. I'll most definitely keep an eye out on the FII flows, whether in the very near term, because of the US-China trade deal, flows move from India to China or not. But be that as it may, 24,500, which was an earlier resistance for the Nifty, will now become an important support. And the Nifty Bank is very close to its support of 55,000 itself. So that's something we'll most definitely keep an eye out on. But we'll also watch out for a lot of earnings that have come by. Zaggle Prepaid, the company reported an overall set of numbers in the fourth quarter. Good sets that has come in, though the stock mildly in the red. Avinash Gourkindi, who's the MD and CEO of the company, joins in now. Thanks a lot, Avinash, for joining in. A two-part question. Last time you joined us, you said that, you will cross that 63% revenue guidance for this entire year. You've grown at 68%. So the obvious question, what are you targeting this year? And the second part that I remember very clearly, you said you're in advanced talks for an acquisition and you might hear something soon. It's been over 3 months. We haven't heard anything yet. What's the update there?
Thank you, Nigel, for having me today, and good to be on your channel. I think, yes, we are delighted to announce a great set of results. We far exceeded our guidance of 63%, and we closed at 68%. And we've grown on all metrics, whether you look at EBITDA, whether you look at PAT, where we doubled our PAT. And cash flow has improved considerably. So we are delighted, absolutely delighted with our numbers. Of course, there's more to do. This year, our guidance right now, given all the volatility around the world and all the uncertainty, we are right now guiding for about 35 to 40%, which is organic, which is on a standalone Zaggle basis, not including any benefits that we accrue through acquisitions. So that's the first question. The second question, yes, these acquisition conversations are on. There are a lot of great opportunities that we are looking at, and there are quite a few which are pretty close to closure. I don't want to jump the gun and say that, yes, this has happened or that has happened. So kindly, wait for the news. Some of these things take, a little while in closure. So that's where we are. We are pretty close to closing, at least a couple of big acquisitions in this year. So
all right. Hi, Avinash. This is Nigel. Mangalam had asked you the first question, but congratulations on outpacing the guidance that you put up. Couple of questions here now. What are the odds that this year as well you go ahead and you outdo this 35% growth that you're guiding for? That's point number one. Point number two is you were guiding that margins to start moving towards mid-teen. That's the longer term, right? In the near term, what kind of a margin expansion should we expect for FY26?
Take the second one first, Nigel. Margins we have already guided for this year and said last year we had given a guidance of 9 to 10%, and we stuck to that range. We were as per our guidance. This year our guidance for margins would be 10 to 11%. Over the next 4 years, we look to move that to about 15%. That's where we are aiming for. And we are absolutely on track. Margin expansion, we are seeing all the green shoots across board, whether you're looking at uptake in revenue, cross-sell, more usage, and AI helping us build in a lot of efficiency in terms of costs, how much manpower we deploy, how much AI can be used. It's just mind-boggling, and we're leveraging it very aggressively.
All right. And what about Zoyer and Brom? You said that the contribution from both of them will increase all the way up to 45 to 50%. Last year, it ended at around 35%, if I remember correctly. So if you could give us a sense of how much Zoyer will grow as an overall contribution to the revenue. And in that, Brom, what does it stand at right now and where does it go?
Yes, Manglam. What we've seen is while Zoyer and Brom continue to grow very well, we were pleasantly surprised how much momentum we were able to get in our other, products like Propel and Save. And one of the realizations that we are having is that there is a lot of untapped business. There's a lot of opportunity across all our lines of businesses. And as we are getting better known, as people are building more confidence in Zaggle, a lot of businesses coming to us from great brands, great companies. So Zoyer today is, around 40%, but we see that to grow further, and eventually we'll see that to be about 50%. Brom is a module within Zoyer, which has tremendous potential, and it's growing well. In all these cases, we see a lot of, contracts first, and then over time, they fructify in terms of revenue and profits. So we are in that initial phase of Brom. The first 6 months is how I would say, where we are really gaining those contracts, and many of them are going live.
All right, Avinash, final question from my end before we let you go. The promoter stake is holding at around 44%, 44.2% as of March 2025. You had plans, I think, to go ahead and increase stake further. Where do we see the promoter stake headed to? You have a 5% window every year. Do you think they'll use that in this year?
Fingers crossed, Nigel. Let's see how the year pans out. Both Dr. Raj and I are extremely bullish about Zaggle, and we are always buyers. So we are always looking to up our stake, to be honest, because we see there is so much opportunity, so much potential, and so many good things that we are doing internally, which will result in great margins and cash flows in the coming years. But too early for me to comment whether we'll increase our stake this year. But as such, we are absolutely, always buyers of the Zaggle stock.
No, the intent is but to go up, right? Towards that 50%. And now there's a sale going on because the stock has come off drastically from the top. So if you don't back your stock, who else will? So we'll have to keep an eye on that. Yeah, Manglam.
That's exactly what I was saying. It's down about 40% from the highs as well. And you're saying not this year, maybe not, or maybe we don't know yet. But at 40% discount from the top, maybe if you're bullish on the prospects of the company, this would have made sense. But then again, you're the promoter, you know a lot better than everyone else out here as well.
We did buy last year significantly post the QIP, right? And there's also the practical point that we should have the cash.
Yeah, we understand that. We totally understand that, Avinash. Just a final question before we let you go. Your cash flow from operations improved a lot from last year. From negative, it's turned into a positive 20 crores, but it's still just 1/5 of the annual EBITDA that you generate. So what's your target of cash flow from operations this year? Because operating leverage typically shows itself most in the CFO.
Great question, Manglam. See, these are things where we consistently have kept the stance that let our numbers speak for us. We are working very hard. We are working diligently. And the numbers are absolutely showing that, right? I mean, the movement is very strong. I don't want to, bite my tongue by speaking too much. This year also, we are quietly working in the background, and we're very confident that our cash flow position will improve significantly. I don't want to, wrap myself by saying it's going to be this much as a percentage of EBITDA, etc. But, rest assured that's a key focus. Margin and cash flow are key focus for us. while growth obviously is the lifeline of a company like Zaggle.
Take that point entirely. Thank you so much for joining in. Before going to the numbers, the street was excited. The stock had already rallied about 9% ahead of the numbers. And now I think the street likes what you're saying, because when we started the show, it was slightly muted from there on. As soon as your commentary did come by, 35 to 40% growth with 10 to 11% margins and higher contribution coming in from some of your star products. The street likes that. There's a mild smidge up on that stock itself. Take a short break. In fact, before we take that, let's get you some ideas for profit coming in from our colleagues at Money Control Pro. Nitin Agarwal joins in with the stock that he's tracking.
The company that I have chosen for today is SJS Enterprises, which is an auto ancillary company. First, let me touch upon its Q4 number. Despite industry challenges, the company reported a strong growth of around 7.8% in its top line. Its EBITDA margin remained above 25%. This is primarily due to the increase in content per vehicle. Now, there are a couple of factors that make us upbeat about the company. First and one of the key growth drivers for the company is the increasing demand for premium vehicle, be it cars, SUVs, and the two-wheeler. Premium aesthetic products offer a higher value and a higher realization, and they are very high margin products. And the company has been aggressively focusing on the new age products, which offer significant value to the company. And in fact, the contribution from those new age products has been rising significantly for the company. In addition to that, in the quarter gone by, the company has onboarded Hero MotoCorp, which is a leader in the two-wheeler segment, as its client, which offers a significant opportunity for company to grow in the quarters to come. Lastly, in terms of valuation, the company currently trades at around 20.2 times FY's 27 projected earnings, which we believe is reasonable given the earnings growth outlook for the company.
All right, with that, we'll take a short break. On the other side, we have Anjay Shah, who's the chairman and managing director of Prudent Corp Financial Services. Sanjay Shah, I beg your pardon. He joins in to discuss the quarter that went by.
Welcome back. You're tuned in to Chartbusters here on CNBC-TV18. Well, let's focus on another company with Prudent Corp Advisory Services. The company reported actually a good quarter. The revenues came in line with estimates. The margins and the profitability beat what analysts were estimating. Mr. Sanjay Shah, the chairman and managing director of Prudent Corporate Advisory Services, joins us on the show. Hi, Sanjay. Good morning, and thanks a lot for joining in. Well, you have been growing at a very, very solid pace. And even in the past year, you grew by around 37%. However, now the base is higher. Do you believe you can continue to grow at this sort of a run rate? And if yes, what does a revenue mix shape up to be?
So thank you for having me. I think I can tell you frankly, because we are a part of entire wealth management piece of the country, and I believe entire retail wealth management piece is poised for a significant growth from here on. So if you look at our revenue comes from majorly from the mutual fund distribution business and the insurance distribution business. And I believe that the mutual fund retail growth, if you look at last AMFI Vision paper, it says that similar to what has happened in US between 1980 to 2000, the same story is going to happen in India from now onwards for next 20 years. So I think I can assume that bare minimum, definitely keeping in mind some volatility over a longer term period. I think the 20% kind of a CAGR in the AUM looks reasonably better to project for next 5 to 7 years for sure. So
all right, 20%. 20% CAGR over the next 5 to 7 years at least, and that's the AUM for the mutual fund industry. I presume that you would grow a clip faster than that if you have to gain market share. Speaking about market share, monthly SIP flow, you had a target of 1,000 crores per month. You fell short of that in the previous month, but in the previous quarter. But the last month once again saw SIPs move to a record high. Do you believe you can hit this 1,000 crore per month target on SIPs this year? And what about your market share there? It's increased from 3.5 to 3.8%. What are you aspiring for this year?
Yeah, so I think you are absolutely true. I think we would have reached by this time 1,000 crore, but you are right, because the month of February and March was a little bit subdued in the industry. That's the reason I think we were sort of etching those 20 crore. In the current year, we assume that we should reach by end of this year a book of about 1,200 crore. So we are assuming that the run rate of SIP coming from the retail should continue at a healthier pace. And today we have a market share of 3.8%. And I believe we'll try to maintain this market share, because regularly you have been seeing some amount of traction coming from the direct piece also. So I'm talking about the market share of Prudent the total SIP book, including the direct piece. And as direct is trying to contribute more and more from the tech platform, if we can maintain our 3.8% market share in the current year, it's going to be a good thing for us.
And the monthly SIP book goes to around 1,200 crores, right?
1,200 crore by March 26, sir.
Got it. All right. Just to reiterate, the top line growth you're talking about for this year is how much?
The AUM growth is about 20% on a point-to-point basis. But I believe as far as top-line growth is concerned, it may not be the same what we have seen last year, because this year, my last year full-year average AUM was about 99,000 crore, on which I earned the revenue. When I'm talking to you now, I am now at 1,09,000 crore. So we are already positive about 8-9%. So full-year revenue growth should be in the range of 18-19%.
18-19%. Got that. Also, distribution of insurance on a small base, that's growing at a fast clip. I think currently it's early teens as a percentage of your mix. Where do you see that number headed?
So I think we are seriously concentrating on the retail health side, and our retail health book is growing very, very rapidly. We closed the year at 150 crore last year, and we are projecting that we should add another 60-65 crore in the retail health side. On the life, we are concentrating purely towards the term and the the guaranteed product for the retail investor. So there also we see a good scope for us to grow at a better pace. So overall, internally, we feel that the insurance should do reasonably better than the mutual fund. There are two reasons: because of the lower base, and secondly, it has a very small, very less penetration in my system.
Okay, so let's talk about the mix itself. 11.5% is what came from insurance products. Mutual funds was actually down 5% in the fourth quarter. Was that lower because, there was softening commissions from AMCs? Do you believe that this is a trend that will continue? Are there any further cuts out there? And in light of that, where do you see your share from mutual funds and insurance be by the end of FY26?
So I think the last quarter insurance has done better than the mutual fund industry. And
yes.
historically, insurance is always better in the last quarter. That's the reason you would have seen that the share of mutual fund has came down. Otherwise, mutual fund is a very predictable revenue, sir, because you'll see it is linked to the AUM and very, very predictable, you can say. So my belief is that gradually insurance should occupy 1 or 2 more percentage on a year-on-year basis. So today, let us assume that the insurance is about 12% my overall kitty. I assume gradually it should go towards 15-16%.
Okay, all right. Let's talk about operating profit then. The margins actually on a year-on-year basis, on a sequential basis as well, actually it improved. The operating margin that we are working with is around 24.3%. Where do you see this number headed, sir?
I think operating margin should, considering the full year of FY25, I believe FY26 should also reasonably remain steady. Only one thing which I'll just communicate, that we are the very large B2B2C player, and in my system, 90% of my revenue and AUM come from mutual fund distribution partner network. If that ratio tilt more towards partner, then you might see some amount of pressure on the payout ratio, because 1% more money coming from MFD, then I have a 60-64% payout. So I think that is the only thing which I think, if the mix change towards the MFD more, then the payout ratio might change, but otherwise I should be able to maintain the operating margin.
Operating margins around this 24%, correct?
Yes, sir. Yes, sir.
And when do you go back to that 28% mark? At some point, do you aspire to do that?
I don't think so, because I think because incrementally, as we are growing, some amount of margin pressure which is already built in. So I think I'll try to maintain the current margin.
All right, 24 to 26%. Thank you so much, Sanjay, for joining in. 18 to 19% revenue growth, 20% AUM growth, a percentage or 2 points higher in terms of contribution from insurance, and SIP monthly book at 1,200 crores by the end of this financial year, with margins between 23 to 24% is what they've guided for. Stock up around 3%. With that, what we'll do is take a short break, and as we do that, let's give you some good news. The good news is that India's business news leader, CNBC-TV18, is now available at your fingertips. An all-new app, which is up for you on the screen, gives you instant access to breaking news, in-depth articles, all financial world updates at your fingertips. What you got to do is download the app from the Apple Store or the Google Play Store, or just scan the QR code, which is up for you on the screen.
Welcome back. We'll focus on a few stocks in the broader markets that are moving on rather large volumes. Z Enterprises, well, that stock is bursting away as we speak, currently at the high point of the day. Remember, the promoter entity had gone in there. They chipped in at around 100 rupees or thereabouts after a very, very long while. Valuations as well comforting, and they're guiding for better times ahead in terms of profitability. So explain, that stock is up close to around 3.5%. Jain Irrigation is another stock that's suddenly seen a big spurt, particularly in the last 60 minutes. So that one comes up for you on the screen. Edelweiss as well is perking up. So that's another big gainer from the broader markets. And you have Stovecraft that's seen a sharp correction from the peak. Well, that one's getting its act together. And that, in fact, is up close to around 600, at around 630 rupees or thereabouts. If you pull up a few more names, Sterling Tools, that's another stock that's come on the radar. And Wokart, after seeing a very, very sharp correction, well, that as well is bouncing back in today's trading session. So keep an eye out on a few of these names. Well, on that note, though, we'll wrap up on this edition of Chartbusters. Stay with us, though. Trading Hour comes up next.